Hello, ladies and gentlemen. Greg Michalowski, August 25th, 2014, end of day Forex report. Before we get started, let me remind everybody that if you like this video and want to see more of it, you can always subscribe to my YouTube channel by clicking on this button right here. And if you want more information on foreign exchange or other markets, you can find me at gregmikefx.com on a daily basis. Put in your email right here and I'll keep you in the loop as well. Today I wrote a piece, as a matter of fact, about the S&P, as the S&P broke above the 2,000 level for the first time ever. So sunny days continue in the stock market. Now what the question was, and I took the opportunity to take a look at the S&P by using the same tools that I use in my foreign exchange, the 100 and 200 bar moving average trend lines. I didn't use Fibonacci retracements, but anyway, I think you might find it interesting, not only interesting, but also maybe helpful to you. We haven't had a correction of over 6% this year, or it was about 6%, I think the biggest correction that we did have. And interestingly enough, the market only traded below the 100-day moving average for 12 out of about 252 trading days over the last year. That's not a lot of times that the market moved below that 100-day moving average. So guess what's important, folks? The 100-day moving average and your stocks on the S&P. So we're going to be paying attention to that going forward for our own 401k markets, or 401k accounts, or retirement accounts that we may have, or any stocks else that we may have in regard to that, because corrections don't always stop at that 100-day moving average. You can have a 20% correction like we had in 2011 at any time for whatever reason. We don't know what the reason is going to be, but there will be a reason at some point for a big correction. I don't want you to lose any money on it. All right, let's take a look at the foreign exchange market now. We saw a very quiet session here in the New York session. Most of the activity was done into the Asian session. We gapped, the dollar gapped higher against most of the currency pairs, to be honest with you. The pound sterling ended up overtaking the dollar during the day, despite the fact that the UK was on holiday with the July bank, or it's August bank holiday, or summer bank holiday, or whatever it's called. And so they weren't around, but the pound sterling benefited from, I don't know, nice weather, barbecues, who knows. But the euro versus US dollar was one of the weaker currency pairs here, losing 48 pips, and on the expectations that the ECB is going to continue to ease, perhaps with bond purchases, and the US is probably getting closer to tightening sooner rather than later, and so that helped benefit the dollar, help hurt the euro, and I expect that trend to continue. We'll take a look at that chart in a little bit. In New Zealand, there's also concerns coming out of New Zealand and their election, which is going to take place on September 20th. The the .com, or what is his name? Kim.com is under the party of the Internet Mania Alliance, or Mana Alliance, said that he's got some dirty scoop or some bombshell on the Prime Minister's key that he's going to present 5 days before the election, just cause all sorts of havoc. So we look forward to that time, September 15th, where Kim.com comes out with his bombshell. That's pressuring the New Zealand dollar and trading here today, and the sterling New Zealand dollar in particular went up 169 pips. So I thought we'd take a look at that currency pair. Why? Because we rarely look at it, and when anything moves 169 pips, I don't care if the value of a pip is $8.43 like it is for the sterling New Zealand per lot. It's worthy of taking a look, right? So if we look at the daily chart here and apply our tools that we normally do, what we've seen over the last few days is the market holding against the 200-day moving average. So that was in play, and the market held that level over the last 4 days, and that's bullish if the market cannot go below that level. Today the market moved above the 50% retracement level of this last move to the downside, and so that's also bullish, and we moved above the most recent highs, and we still have August highs to take care of on the top side if this market is going to continue to move to the upside. But the most important thing is the ability to hold support here, find buyers, and then start to develop that move to the upside upside, and that's what we saw. That's what we've seen here in the off the daily chart, at least for the sterling New Zealand. Now, off the hourly chart, we can apply a trend line down here at the bottom, which is a parallel trend line to this topside trend line. So we're in this wide back and forth type of motion here on the hourly chart for the sterling New Zealand, and we held not only the 200-day moving average, which is this line right here, the overlay, but we also held the bottom side trend line. So this worked as well. So traders had good reason to buy the lows right here near the opening, and they did, and the market ended up moving above the 200 and then above the 100, and you can see how the correction down came down toward the 38.2% retracement of this move to the downside here. We also came down and toward the 100 bar moving average, and risk can be defined and limited right against this level, and traders did use that level as support, and the market moved higher. Now, we do have some resistance going into the night session, into the new day session, I should say, at 198.91. And if we get above that level, I think it opens up the door for further upside potential for the sterling New Zealand. Now, where is risk for this currency pair? Because, quite frankly, I don't trade it often, but I can apply tools to it just like any other currency pair, and I can take a look at the move to the upside in trading here today and define that as a trend-like move and put the Fibonacci retracement on it and say that 97.86 to 98.08 is my support level. Alternatively, I can simply, if I don't want to risk that much on this trade because I'm not familiar with the currency, I can put a line right here in between the 100 and 200 bar moving average. After all, the market, for the most part, since it moved back above the 100 bar moving average, has been finding support against that level. So I might as well use the 200 bar moving average and say, you know, just stay above that level. Stay above the 100, the 200 bar moving average. Let's just, for giggles, put a Fibonacci retracement from our corrective low right here, and 38.2 50% retracement comes right near the 200 bar moving average of the 38.2 does. So that's a good support level as well. For a reason to buy it is this support level. So bullish here in the sterling New Zealand for the reasons I cited. One of them was the pound went up because they're on vacation, and the other one was because this guy Kim.com says he's got a bombshell for an election. Don't know if those are the things that trends are built off of typically from a fundamental standpoint, but from a technical standpoint, we can define our risk and limit our risk, and hopefully those levels do hold. So there's a little story for you, a little different story for you, but the same tools and rules apply. If you can do that and define your risk and limit your risk, that's most important in your trading. The euro versus US dollar, I mentioned, went down today. Most of that activity was done early in the day with a gap to the downside. Our low from Friday came in at 19. The high today is at 13, so we still have a little gap to fill up there. But that doesn't have to happen anytime soon. We can go lower here in overnight trading or in the new day trading and run away from that gap and not go and fill it for another 2 years, if for all I know. So when I see a gap, I don't necessarily look to go and fill it. I just look for, if I want to go and fill that gap, look for positive things that might get us up to that level. So if you take a look at the hourly chart, is there anything positive off this hourly chart? There's really nothing positive over here other than the fact that the market made new lows and couldn't sustain the selling, and so we saw the rebound to the upside. But we didn't take out the early highs in the Asian session. We just kind of came down. So there's nothing necessarily positive here. And on the 5-minute chart, we're below the 100 and 200 bar moving average, so there's nothing much positive here. Now, we did have some positive here, but it couldn't sustain it. When the market fell below that, we started to see the sellers here. You can almost see the buyers against the 100 and the sellers below the 100. So in overnight trading, if the price moves above the 100 and 200 bar moving average and you're just intent on going up and filling that gap up at that 19 and maybe even moving even higher from there, go ahead, put the trade on. You can define your risk and limit your risk against 100 and 200 bar moving average. Knock yourself out. But overall, I think overall the euro versus US dollar continues to remain bearish. We from Jackson Hole, we had comments from Draghi suggesting that they were more inclined to add more liquidity via bond purchases down the road, and also Yellen, although she was a little bit wishy-washy for my liking, she and the FOMC with the statement and other federal FOMC members' comments last week suggested that they're getting closer toward tightening rather than getting closer toward tightening, period. So that should be a benefit to the dollar, should be hurtful to the euro. Next key target on the downside comes in at 130.104, and then the 50% retracement level of the move up from the 2012 low. Seems like a logical target for me on the downside at the 130.16 level. That doesn't seem out of the question at all, as long as the bias can remain to the downside. Where don't want to see the price move back above the 132.47 is the closest level of that line in the sand. That level represents a 38.2% retracement of the move up from the 2012 low to the high. Don't want to see the price move above that level. Sterling versus US dollar, I mentioned that it is up on the day and the strongest currency today against the US dollar. We didn't start the day that way, but we did find support against the bottom side of this trend line in the first hour of trading, and that was enough to start this little grind to the upside. Again, no traders at work today in London, so kind of a mystery of why it was so strong. No economic data, but or strongest, but the market did from a technical perspective hold this and also get above our lows from Thursday and Friday. That helped propel the market above the trend line, and then we moved above the closing level, and then we moved up to the 100-hour moving average and moved up to the highs from Thursday and Friday, and that's where the buying ceased, and for the New York session we kind of just wandered. I would look for support against the 60 level in overnight trading. If the market goes down to that level, look to see if those buyers do come in against that level. They were there on Thursday, they were there on Friday. Even though the dollar got bid on Friday against the euro and the yen in particular, the sterling did not lose value against the dollar, and so we're going to assume that there's some bid buying down below. So let's watch the 60 level on the downside, see if that level holds. Let's look at the dollar versus yen. The dollar versus yen moved to new highest levels going back to January 24th. But it was not able to sustain the move above the April high at 104.12. Guess where we need to get back above if this market is going to continue to move higher? And I think eventually it will move above this 104.12 level, but we need to get above that level in order to push higher. We did come down to the underside of the broken trend line here, which had 1, 2, 3 different points on it here. We moved above and below those levels on last week's Wednesday, Thursday, and Friday. Today we held support against that old trend line, so we'll see if the market can hold that level overnight and get back above the 104.12 level. If it does, I'm like the euro versus US dollar, can I see the price moving up toward the old toward a level up there, like at 105.43, the high price for the year? Yes, why not? And the fact that just a little fact that the high price for the year came in on the first trading day of the year says to me that ain't gonna happen. Come on, that's too. How many times has that happened? I don't think it's going to happen. So I think at some point we're going to move up. The dollar's going to remain bid against the yen. We're going to move up to the top side. There could be other geopolitical risks or stock market falling that could cause a flight into the relative safety of the yen. So we always have to define our risks. You can take my word for it that we're going. That you can say that Greg said we're going to 105.43. But that comes with this disclaimer, folks, that we don't start to move and take out other support levels like this trend line, like this 61.8% retracement at the 103.64. If it goes below those levels, I'm not long anymore, okay? I may not be short, but I'm not long anymore, okay? So understand that fact, understand that dynamic. Also, if we move lower, watch the 100-hour moving average at 103.67.9. What is that? Just above that 61.8% retracement. 103.67.9 is where it comes in. Here's a 61.8% retracement. So we're going to be watching. This is going to be a key level if the market rotates to the downside in early trading overnight. Look for that support against the 100-hour moving average, against the 61.8% retracement. Dollar versus Canada banging against the tops. So for August, we have 1, 2, 3, 4 different tops, so within a few pips of each other at the 109.86 level. Move above that level, we'll be looking for the 110.26 level on the top side. On the downside, this trend line here, we had a number of different points. We moved a little bit above and below it, or below it here, but tested the 100 and 200-day moving average. Nice kiss right there against threes. The crowd, the market moved away from it. Now the next level to get above is these highs in August, and then move to the 61.8 at the 110.26. Governor Polos of the Bank of Canada over the weekend at Jackson Hole said weak job growth gives bank time on interest rates. Said it's too soon to say if Canada export trend is improving, and finally said the Canada labor markets isn't creating expected jobs. That helped weaken the Canadian dollar and seeing that move to the upside. And the Aussie versus U.S. dollar coiling like a spring here below the 100-hour moving average at the 92.98 level. Let's call it 93, and above the 50% retracement of the most recent move up from the August 8th low to the high that we saw on August 19th or 18th. And so this area right here, get above or above the 100-bar moving average or below the 50% retracement level. This is the neutral zone. Either we're going that way or that way. Finally, the New Zealand versus U.S. dollar fell below the 38.2% retracement at the 83.94 level, where I told this story about why the New Zealand dollar is weaker and the weakest currency today. We did move to the new low levels going all the way back, or going back to March here, and below the 38.2. Stay below the 83.94 level, and the bears remain in control. Let's take a look at the hourly chart, and 100-hour moving average coming into play here at the 83.87 level as well. So that takes a look at the some of the major currency pairs. Once again, if you have interest in these emails, you can subscribe to my YouTube page, and also if you want interested in forex commentary or other commentary, you can go to gregmikefx.com, put your name or email address in here, hit subscribe, and I'll be in touch with you. Good fortune with your trading. We'll talk to you again tomorrow. Bye bye now. Oh, by the way, I failed to say New Zealand has trade numbers coming out tonight. Trade balance figures coming out with minus 475, and as far as on the calendar for tomorrow, the UK has BBA mortgage approvals at 430. Durable goods come out in the US. It's always a volatile up and down number. It's supposed to get a big 7.4% increase. S&P Case-Shiller coming out tomorrow. U.S. Consumer Confidence and Richmond Fed Manufacturing Index will complete the picture. Now, goodbye.